Okay, what's up traders? What's up tycoons? Super excited for today's video, giving you guys an update on HBAR. Okay, this is Hedera Hashgraph. This is a viewer request. I do these viewer requests every week. So if you want to see your token in the next video, all you got to do is comment down below. We're going to go over the different chart patterns that we had, go over our three major retracement levels, which is why you see these multiple times on the chart, as well as some of the bullish price targets to the upside. And we're also going to take a look at the MACD down here, as well as the relative strength index, to see if there's any clues into some of the possibilities of this future price action for HBAR. So make sure to smash the like button, subscribe to the channel if you guys are new, and we'll jump straight into it. We're going to start off here with the three major retracement levels, the 38.2, the 50%, and the 61.8% levels. These are the three most common and most well-respected retracement levels. Now, why are these important, you're asking? Okay, well, nothing moves in a straight line up or a straight line down. You get a move up, retracement, continuation higher, or a move down, retracement, continuation lower. So that's why we look at the three most common and well-respected retracement levels. Previously, when we were in a bearish trend, you can see we were coming up, rejecting our 50% retracement level, moving down, coming up, rejecting our 61.8, moving down, rejecting our 38.2, and most recently, we got a reversal. So you can spot a reversal, all right, when you break through your major retracement level. So if you move up, you pull back, retrace, consolidate, and then break through those retracement levels, you can spot a retracement to the downside, as well as spotting one to the upside when you move down, move up, consolidate, and then break through those retracement levels, okay? And that's what we most recently got. We got a nice breakout of our retracement levels. As you can see, we moved down here, all right, we came up, we consolidated, and we flipped our 61.8 from resistance to support, and we exploded up higher. So it's been really, really great. We also had another wedge pattern. Okay, now this was a larger wedge pattern. We had a rising wedge initially over here that ended up leading to a move to the downside, with a smaller falling wedge that led to an upside. Remember, a rising wedge is bearish and a falling wedge is bullish. Okay, so when we look at a bigger picture, right, we ended up having a nice little wedge right in between here. And in a perfect world scenario, this is going to come up, and your breakout is going to come up to where, right around where the pattern began. And if you take a look, that's right around where we came up to. So I would say we definitely hit the price targets for that breakout of this falling wedge, this descending wedge. So now we really need to figure out what's next, okay? And in my opinion, we're in a little bit of no man's land right here, okay? Meaning that most likely we're going to be consolidating in these levels, and what's really going to be important is either our blue breakout level up here. This is our previous high that we just established. If we can break out from there, we have some bullish price targets to the upside, as well as our major retracement levels of support. So over here, we were looking at downtrend retracement levels, right? And we saw we finally broke through it and got the reversal. Well, we started a smaller uptrend now, okay, because we were making highs, lower highs, lower highs, lower highs, lower highs, lower highs. Now we've started to make some higher highs. We have a high, we have a higher high here. We're going to see if we can continue this and try to create some higher highs up here. Now, in order for this to happen, we need to hold our major retracement levels, right? So we've had a very strong move to the upside. If you take a look, we've already retraced to the 38.2, and we're moving back upwards. So, you know, if we stay above this 38.2, that's going to signify that we're in a strong uptrend, right? In this shorter term sense. Okay, and if you come to the 50%, then that basically equates to a normal uptrend, and then your 61.8 is going to be a weaker uptrend, right? So we're doing a very good job of holding above our 38.2, which signifies that we're still in a strong uptrend, but we haven't really broken out, right? So we're really just kind of in again, no man's land right here, and we're going to wait to see what actually happens, right? We could come out and break out to the upside, or we could pull back to our further retracement levels down here. Now, specifically, those levels are going to be 0.0636, 0.0583, and 0.0530. Those are the three major levels that we want to hold if we want to see an uptrend continue. If we come down, consolidate, and break through those levels, then most likely we're going to come down and retest some of our previous lows that we were just at. All right. Now our breakout level is going to be 0.0809. Above there, we have bullish price targets of 0.0861. We also have 0.0888, 0.0928, as well as 0.1120 all the way up here if we get a really, really strong impulsive move over the coming future. All right. Now, let's go ahead and dive into the MACD as well as the relative strength index. Okay, we're going to take a look at both of these to try to get some context. So the first thing I want to highlight on the MACD is the chop zones, right? So the MACD is really good whenever you get these clear, precise movements, right? So over here, we get a sell signal. A sell signal is when this red line crosses below the yellow line right here. That's going to be a sell signal. And then a buy signal is going to be when the red line crosses above the yellow line and is trading above it, right? So you see we get a nice crossover right here, strong move to the upside. Over here, we got a crossover to the downside. We had a strong move to the downside. Now these are the periods of chop right here, and notice how the MACD is going up and down, and it's curling up and down, but not giving any true sense of direction like it did over here in these previous two examples. Well, when this is happening, typically what you're seeing is you're going to see the trend continue, right? So we were in a downtrend and the MACD starts chopping up and down, and what happens is that trend continues. All right. So we want to be a little bit cautious here because we are currently below the yellow line, but there is a possibility that we could just be chopping and, be going up and down around this yellow line on our MACD, in which case we wouldn't get as strong of a move to the upside as we did over here, where it's mostly green candles. As you can see, this is a lot more choppy. And so we could end up just chopping our way up to our previous breakout level before getting a decision if we're going to break out or if we're going to reject there and head back lower. Okay. Now, another thing you can look at on your MACD is also divergences. So take a look at how we have a low here and a lower low. So we're definitely in a downtrend, right? Here's our low, and then we make a lower low. Well, take a look what happens here. We actually have a low and then a higher low, right? So we actually create a bullish divergence on our MACD. Okay, so at this point where we have a low, we also have a low, and then at this point where we have a lower low, we actually have a higher low. So when you see the divergences, when the price action is doing something different than the MACD, that is an indicator of some possible activity, whether it's bullish or bearish divergence. So we want to be cautious if we start to form a bearish divergence right here. Okay, we have made a high and a lower high, and the MACD is trending down a little bit lower. So, not necessarily a strong divergence, a bearish divergence or anything. But if you take a look at your relative strength index, we do have a bearish divergence. Okay, so if you notice here on the relative strength index, we're actually in a bearish channel right now, and it's trending lower, okay, making lower lows and lower highs, while the price of this token has actually definitely been in an uptrend, right? If we take a look at where our bearish channel began, right over in through here, okay, we can see that clearly prices moved higher. So we're making a high and a higher high, but we're making a high and a lower high over here, and we have a bearish channel. So this is an indicator we could see some type of bearish activity. Okay, but it doesn't mean we have to get a full-on reversal, guys. Okay, if you look, we've already started to pull back some, and the MACD is choppy. We're chopping our way over here, but we've done a good job, as I said in the beginning, of holding above our 38.2% retracement level. That's a good sign. If you're bullish on this, what you want to see is us break out of this bearish channel on the RSI, pull back, retest it, and continue back up higher. And you want to see your MACD really curl back above the yellow line and get some space in between it, right? Versus just being so choppy. All right. So keep in mind, though, we do have the bearish divergence. We could see some bearish activity here in the future, and, we could pull back to some of our major retracement levels. But if we hold above these and we're able to find support, consolidate, and then push back up, there is a good chance that we're still going to be in an uptrend and that this was just a healthy retracement to continue higher. But if we come back down and break through these levels, then we could be getting a reversal and, again, testing some of our potential previous lows. So that's it for today's video. Hopefully you enjoyed it. If you did, smash the like button and subscribe to the channel. And I really appreciate you making it this far in the video. If you did, you're probably going to enjoy one of these next two videos as well. So make sure to click on one of those.